Konnichiwa. Well, um, my my buddy out here, Josh Galt, has had pretty good luck with putting up his market wrap-ups, and I dig his perspective, and I kind of like those videos, so I figured I would make one of my own with my own take. Josh and I see things very differently on on many uh, on many fronts. We have different time preferences. We have different backgrounds. We have different financial situations, and I think it makes for us being decent companions on here. You know, from my commentary. I mean, obviously his channel is able to grow leaps and bounds above mine, which is great. I'm very happy about that. Um, what I want to do in this video is give you my take on what this third quarter has been like in the markets. Um, my perspective will be somewhat unique in that trading wise, instead of being in the commodities or IPOs or anything like that, I've mostly, no, not mostly, I have been specializing in currency pairs. So the types of news that I check out and the markets that I monitor are different than the ones that other people do. A little bit of background on myself. I was rolled out of a gold position. My stops hit just before the beginning of the third financial quarter this year. Um, a couple of years ago, I had attempted to trade Forex, and I just could not come to a short-term strategy that made money. I mean, if my point of previously, if my point of participating in the Forex was to lose money, then it would have been great. But I tried a couple of different things. So much of the information and education on Forex out there is vague. You have you have experts telling you that it can't be done. Then you have other experts that say, "Yeah, we do it," and so you're left kind of in the middle as a little guy. Not to make it as an endorsement of the Forex, but what it has going for it for me, which it isn't where I originally intended to be. Um, it's very easy to scale into it when you are sub micro level. What's a sub micro account? Well, as Cosmos Gato would say, probably like 10 grand. It's not funny to joke about money, but man, some of these big traders, they when they're hitting the bid, and their idea of a small lot is $1 million. I mean, it's so much money. It's not baffling. It just is what it is. Um, I was checking out the this video series about an ex Goldman Sachs trader who happened to be one of the guys that was the hosts of that Millionaire Trader show, and he was talking about how much money his team at his trading desk controlled, and it was between four people, but they were in control of $500 million in capital. That was for work. Uh, I'm not going to say that's a baffling amount of money, but there are countries that don't have $500 million. Well, heck, with America having a deficit, you could say America doesn't have $500 million. But excuse me, um, I digress. This quarter has been interesting because you've had the Fed chairman, with the United States federal chairman, talking about allowing the economy to sort of return to normal. Now, the currency markets responded interesting to that, in that whenever Bernanke talked about letting the economy do its own thing, the U.S. dollar actually gained strength. Um, it seems to gain strength when there's less when there's a reduction in intervention, and it loses strength when there's a lot of intervention. Just has to do with, where you think people are going to be trading their money for. What kind of market is strong that you need, or that one needs US dollars to buy stuff with. Now, the reason why I'm making this video is it's sort of been like a yo-yo. The market overreacted to the earlier statements of the Federal Reserve saying, hey, we're going to be backing off on this, and the market just did this volatile little shake. And then slowly but surely, they're like, well, it's not going to be, we don't have a set plan for coming out. It's going to be as needed. And then it ends up kind of making its way back. Now, all the while, the Australian dollar, it's going through similar to what the US dollar has been going through, in that, their Federal Reserve is talking about, bringing things back. Japanese yen, they're talking about having these same financial measures of, their own little versions of quantitative easing. I don't think I need to talk about the euro, do I? I mean, obviously with bailouts and things of that nature, I'm surprised the euro continues to do as well as it does. That the euro dollar in the Forex does as well after everything that it's gone through, I think is a testament to the advantage. Now, when I say this, please understand, I don't mean that it's right, I don't mean that it's wrong. It's just something that is, okay? But that the euro dollar is still holding, I think, is a testament to the advantage of having the whole world on a fiat and manipulated currency, because everything is traded against itself. So if one currency is doing great and you have purchase power with it, and you're getting out of another currency that is doing poorly, that's losing purchase power, then that's all well and good. But because there's control, if they see that scale tip too far to the other direction, the side that's doing too well can call up on the phone and say, hey, listen, we need to figure out a way to balance this situation out. Because all throughout history, from the old Spanish silver dollar versus the U.S. silver dollar, when economies were dunked because one country's silver dollar had more silver in it than another country's, and all the money left one country for another. That was a key component to the old business cycle. So there's less of that situation now, and it's interesting to see that balance out and to see these people working so hard. I believe it's easy to just sit back and say, well, it's wrong, or we should have a hands-off approach. But honestly, to me, with the genie out of the bottle, I mean, what are you really going to do? I mean, who actually has a better plan to say, well, we're just going to go back to silver and gold, and we'll just let it all sort of come out. I don't know. Don't take that the wrong way. I'm not being a defeatist or whatever. I'm just trying to learn a new living and keeping track of another edge of the market that I feel I can get my toe in. Now, on another personal front, once I am fully re-engaged in the Forex, do I intend to just sort of stay in the Forex or whatever, if you're at all curious? No. The Forex, once I get back in and get the account built back up, I won't, the Forex will be part of my trading, but it won't be my only. I definitely want to get back into the commodities and just the regular stock and the Dow and the S&P and all that, um, because you have to follow that volatility. You have to be in the market that has those price changes. Now, is that an ethical issue? Some may wonder. To profit from swings in value. Should we just stay away from that? Um, I think that's a great question. That's a great question of ethics. I mean, if a company is undervalued, is it right to purchase shares of that company, or if a currency is undervalued, is it right to purchase um, shares of that currency? Well, a couple ways to look at it. Um, let's say a stock value is low because a company is going through a hard time, and some of you small business owners may be willing to identify with this. Um, if I am willing to actually hit the bid and purchase some of those shares at that lower value, I am offering my money, my liquidity, my support for the strength of those shares. That it may increase in value later on because the business is doing well and shares in a company hold value. Um, I don't think what I am doing in that manner is necessarily evil. Okay. Um, Same even goes for shorting a stock. If I take a short position on a currency pair or a short position on a stock, I am obligating myself contractually to uh, purchase a share, however many shares that I am doing. It's not an option. You go a full short. It's not an option put. Okay. You are obligating yourself to repurchase, and if you're operating in a margin, um, you could be liquidated and closed out if it becomes too far. You can't just wait forever. So now, all of that being said, where do I think this quarter is next necessarily going? Frankly, because it was so noteworthy that Q3 started out the way it did with the Federal Reserve hinting that it was going to be backing off. Um, I am actually looking for Q3 to end the same way that Q2 ended, with just sort of more of the same. It seems like the Aussie dollar is coming back strong. The British pound, it's taken a little bit of a beating. Japanese yen still getting beat. Um, I'm thinking the U.S. dollar is losing value for the end of Q3. So, what does it all mean? Well, understand everything that I've just discussed is very short term. I'm not talking about the end of the world here. I'm just talking about a matter of weeks. Okay, I'm not saying that currencies are going to crash in Q3 or anything like that, and I'm not saying that fiat dollars is right, and I'm not saying that the way the economy runs is the way that I would do it. Okay, we'll get that out in the open. But it is what it is, and if you are at all interested in the markets, appreciate you sticking around and just listening to me flap my gums. And that's going to be it for now, and there's your halfway through Q3 report. And we'll have more later. Probably next big report I'll do a Q3 wrap up, unless something significant happens. And other than that, we'll see y'all later.